Chevy is called the heartbeat of America for a reason. With SUVs made to move with your rhythm. The versatile Equinox tackles your entire day. The spacious Traverse fits your crew and your whole weekend. And Trax brings style with value you can count on. All infused with tech that has your back, so your drive always hits the right chord. Chevrolet. Together, let's drive.
This episode is brought to you by Accenture. When your advertising operations fall out of sync, everything else follows. Spotify and Accenture are working together to reinvent the rhythm of ad sales, using automation, analytics, and smarter workflows to simplify campaign delivery and access better data across the business. The result? Less time spent on operations, more time connecting brands with the moments and fandoms that matter most. Learn more at accenture.com/Spotify.
When you need to build up your team to handle the growing chaos at work, use Indeed Sponsored Jobs. It gives your job post the boost it needs to be seen and helps reach people with the right skills, certifications, and more. Spend less time searching and more time actually interviewing candidates who check all your boxes. Listeners of this show will get a $75 sponsored job credit at Indeed.com/podcast. That's Indeed.com/podcast. Terms and conditions apply. Need a hiring hero? This is a job for Indeed Sponsored Jobs.
This summer, soccer is here, and so are the watch parties. And Uber Eats has your game day essentials covered. Everything you need to keep your crowd happy, delivered straight to your door. Get wings, pizza, chips, dips, fresh ingredients, and more. Keep the soccer going and all your game day essentials flowing. Order in so you can lock in for the games. Only on Uber Eats for a limited time.
This episode is brought to you by Perfect Bistro Cat Food. Hey guys, today I'm interviewing my cat about his perfect bistro food. Percy, you seem to be a big Perfect Bistro fan. Care to comment? Totally. What do you like about it? You love the high-quality ingredients? And the delicious flavors, of course. Yeah, that makes a ton of sense. Listen to Percy, guys. Visit perfectbistro.com to try it for your cat.
Before we begin, quick disclaimer. Nothing in this episode should be considered investment advice. Results discussed have not been independently vetted. Any claims made by the guests have not been verified. The content is for educational purposes only. The views expressed by the guests do not reflect those of the host or the show. Imagine you've worked incredibly hard to build your business. Maybe you're a physician with a side business. Maybe a consultant, coach, investor, speaker, content creator. Your income is growing. You're landing new clients. Revenue is climbing. Yet every April you seem to get blindsided by taxes. You write another check to the IRS and tell yourself, well, I guess that's just the price of success. But what if that isn't? What if the biggest leak in your financial life isn't your spending, investments, or your business expenses? What if it's the tax decisions you're not making throughout the year? One of the biggest misconceptions I see is that hiring a CPA automatically means you're optimizing your taxes. In reality, many business owners have someone preparing their tax return, but very few have someone helping them build a year-round tax strategy. Those are two completely different things. Today's guest, Penny Rose, spent 20 years as a forensic accountant with the FBI before becoming a CPA and tax strategist. She works with entrepreneurs, influencers, and content creators, helping them legally keep more of what they earn by making smarter decisions before the year ends, not after it's too late. In this conversation, we discuss where high-income entrepreneurs unknowingly leak money when an S corporation actually makes sense, how retirement accounts can dramatically reduce your tax burden, the biggest mistakes that attract IRS attention, why so many successful business owners still overpay in taxes, and how to shift from simply filing taxes to building a comprehensive tax strategy. If your goal isn't just to make more money, but to keep more of it, this episode could save you far more than it cost you in time. So let's dive in. Good morning, guys, and welcome to another episode of the Financial Freedom Podcast. I'm delighted about today's returning guest, Penny Rose. She's CPA. She's founder of Fee FIFO Fund Financial Services. She's a tax strategist and tax planning, and she helps entrepreneurs. She's got a fantastic way of helping people plan as well as save on their taxes. Penny, welcome.
Thank you. It is so nice to be with you. Financial freedom, the name of your podcast, is so appealing to me because to me, freedom is one of the most important things we have available to us. Finances are what creates some of that freedom.
Introduce yourself, how you help clients. What do clients come to you for?
I retired from the FBI. I was a forensic accountant for 20 years, which means that I could testify on financial activity that ran through subjects' bank accounts. Near the end of my career, I was allowed to start my own company. As a CPA, it made the most sense to me with my interest in personal finance to become a tax strategist. If you meet people who are interested in personal finance, they're not looking for bookkeeping. They are looking to optimize their tax situation. That's where I started. But once I started thinking about who I wanted to work with, I switched and I primarily work with influencers and content creators. It's one of the most amazing niches to work with because they don't have the same level of knowledge that my fellow members of the personal finance community have. So I help clients set up a plan to match their taxes and their finances with their values. So someone who wants to keep as much of their money as possible, we set up a plan for them to reduce their taxes while contributing the maximum they can to a retirement account.
What are the particular needs of influencers, thought leaders, creators in the personal finance space? How are the needs different than, say, business owner, mom, and pop, or corporation?
I have a client who is an Amazon influencer. She gets a 1099 from Amazon for $1 million. She has a very unique set of needs because of that amount. She has minimal expenses, which is an ordinary mom and pop may have revenue of $1 million, but they may also have expenses of $750,000. Their net income is much more in line with a standard American professional employee near the end of their career. She knows exactly how to influence and how to create content prior to working with me about how to keep that money. Anybody in personal finance would automatically think she's in the 37% tax bracket. She's paying the highest possible rate. One of the first things she and I did was start setting up a retirement program. This year, when I did her taxes, she was able to drop the highest tax rate she paid from 37 to 35% because of the tax strategies that we did. It meant she kept more of the money she brought in.
Get business done with the new American Express Graphite Business Cash Unlimited card. With unlimited 2% cash back on all eligible purchases, unlimited 5% cash back on flights and prepaid hotels booked through American Express Travel Online, and a flexible spending capacity that can grow with your business, you'll have the confidence to keep building. Apply today and earn a welcome offer of $1,500 cash back after you spend $50,000 in qualifying purchases on your new card within the first 6 months of card membership. Terms apply. Learn more at go.amex/graphite.
We'll talk later the strategies to use to decrease the amount of taxes people have to pay legally. In this space, what are the common leaks? How businesses are losing money, either by taxes or things they're not consciously aware they're doing, they're losing money from.
Tax strategy lends itself very well to that. In the United States tax structure, companies, individually owned companies, are allowed to choose to be taxed as an S corporation. Somebody that's a very high earner for their business could be leaking money by not choosing to be taxed as an S corporation. The leak comes from self-employment tax. It's Social Security, or when people that get a W-2, when you look at your W-2 in FICA, that is Social Security and Medicare. Our system allows business owners to split how they get paid. It reduces the amount of income on which they get taxed 15.3%.
At what point should people start considering incorporating into an LLC and a S corporation? Is it at $1 million revenue or profit? How do you determine that?
That's not a tax strategy. How you determine that? When I was working for the FBI, I had friends who were working for IRS. I was good friends with an IRS auditor who audited small businesses, LLCs. IRS policy automatically increases the likelihood of being audited when an LLC doesn't choose to be taxed as an S corporation, about $125,000 of net profit.
Next question I have for you is a lot of people have a CPA and they're still losing money on taxes. What is the problem going on there?
The biggest problem is that people don't necessarily recognize that some CPAs are tax strategists and will prepare a tax return for their client. But a great majority of CPAs who prepare tax returns are not tax strategists. They have a crushing volume of tax clients. During tax season, they're working as many hours as they possibly can to get all the tax returns done. In the off season, when they're not doing tax returns, they're recovering, getting ready to get into the next busy season. Whereas a tax strategist works with people all year long, has fewer clients. So I have a bit of a busy season, but I have plenty of time. I'm working with clients all year long so that the year doesn't end without them taking all of the actions they need to take before the end of the year to get all of the tax benefits they can. The best example of that is the employer portion of a solo 401. There are two sides of it. There's the employee portion and the employee portion. The employee portion needs to be made before 12/31. A tax strategist has the time to help make sure that happens. But a CPA who's working with 5,000 clients, in some ways you're on your own.
What is the best way to go about asking the CPA in terms of, are they a tax strategist? Is there certification or something they have to ask further when they're searching for more personalized type of advice?
When you're speaking with a CPA, one of the best clues about whether they're a tax strategist versus just a tax prep is the cost working with a CPA as a tax strategist is higher. What they will help you understand is that if I work with a client and I know, because I've reviewed their tax returns before I meet with them, I know I can save them easily $10,000 a year from working with me. If I say the cost of working with me is $5,000 a year, you're going to make the cash flow work. Is that because you're working with me, your estimated tax payments are going to be smaller every quarter because I'm going to help you save $10,000. That money that you're saving by not having to pay those estimated tax payments is going to get more benefit than what it's going to cost to work with me.
Earlier, you were mentioning the solo 401k, and you mentioned the employer and employee contribution. Let's say there's a influencer, they have solo 401k that they contribute, but they have no employees. How does that factor into how much they can contribute each year?
That is IRS terminology. The IRS 401k terminology is designed for W-2 employees. When I was a United States government employee, the employee portion came out of my paycheck. The employer portion came from my employer. A solo 401k, which by itself means you'd have no employees. You are the employer. The employer portion comes from you, even though you are employing yourself. If you were to have an outside employee, you wouldn't be eligible to have a solo 401k. It's language that they carried over a standard W, and it doesn't fit quite as well.
Most physicians are great at making money, but terrible at growing it. You work 60-hour weeks while your savings sit in accounts earning basically nothing. NERP changes this. It's algorithmic trading designed specifically for busy professionals who don't have time to watch markets. AI-powered strategies that work while you're seeing patients. No day trading, no guesswork, just systematic wealth building designed for people with demanding careers. Built for physicians who want their money working as hard as they do. Check out start.nerp.com/doctors. That's start.nerp.com/doctors to learn more. Links in the show notes below. Note, NERP is a paid sponsor of this episode. All trading carries risk and results vary, so do your own research. This isn't financial advice. I remember reading these guidelines. It never made sense to me because a solo 401k is just one. On the topic of your background, you've had to work for the FBI and the IRS. How is IRS going to be able to enforce these complex rules with less budgets? Is it going to be used with artificial intelligence? How do you see that?
I love that question. For most people that have a W-2 and a 1099 from your bank for your high yield savings account, 1099-D from your investment house, it's going to show your capital gains, your dividends. IRS gets all that information every year. Unfortunately, their technology is so slow, they don't have access to it until mid. The tax deadline is mid. In my thought, how IRS is going to get better at enforcing the laws that already exist is that at some point, they will go ahead and file for you unless you opt out of the system. Then it basically takes most people off the table. Then it becomes businesses and investors and people that need an outside system in order to get the information they need to go on the tax return.
Interesting. So going to automate a lot of the things that don't need, and then the ones that need more scrutiny. The other thing, talking to a lot of CPAs, what I found interesting was you talk to one CPA, he or she says, you mentioned the solo 401k or the S Corp or LLC, but you take a more holistic approach. You talk about the HSA, paying your kids, condense it in a few minutes.
That's one of my favorite topics. The way that started for me was I was so excited about the paying your kids strategy. The more I talked to people, I would lead with paying your kids. They realized very quickly they could keep a lot more money and reduce their tax bills by putting their own oxygen mask on first. I say, if you're doing the different levels, so you're going to do the most important level first because we have a bias to personal finance of saving for retirement. And that's going to be the first bucket I want people to fill. Then look at other buckets. The very last bucket, as I talked about in the presentation, is if you're doing all this, have children that you can hire, and it makes sense for them to work in your business, then add that at the end. I do an order of operations in trying to maximize, because not every strategy works with every other strategy. Sometimes I'll have clients who say, I only want to do one. That's totally fine. But if they're like, I want to do them all, doing them all isn't the best idea either, because some of them contradict the other.
What are some of the most common things that financial creators, thought leaders, influencers do that draw the eyes of the IRS when doing their taxes?
The first one is having a net income and not being an S corporation, and net income for the business over 125,000. That's one of the higher ones. Part of that is because IRS, over a certain point, they want you to start making contributions to your payroll tax at least once a month. Some people have to pay in every 2 weeks, depending on their paycheck. And the IRS doesn't want you to get caught behind the 8 ball. Those are things that draw the attention, because there's all kinds of crazy stories about people that waited until it was tax time and they realized they owed way more than they would ever be able to catch up on. One of the other things that catches people in this space could be caught behind the 8 ball is to not do genuine payroll. I recommend anytime anybody does payroll, they use a full service discount payroll agency. That agency handles all of the filings for them and transmits the money. A red flag would be for someone to decide late in the year that they want to be an S corporation, and an S corporation is required to have payroll. Now, you could get payroll software and create a W-2 with a year's worth of salary, and you could file based on that. But IRS is going to know that you have not been paying yourself on a regular basis all year long. That's another way that influencers who are seeing these amazing strategies on TikTok and saying, oh, I'm going to do that one. That's going to fix everything. And I don't need to do it ahead of time. I can just do it at the end of the year. And that really put you on the radar.
Going back to April 15th, for example, you get financial leaders, their income is variable. How do you avoid getting a surprise tax bill saying you owe $60K for the income from last year? How do you avoid that?
There's a couple of ways. Pretty easy to do that. One of them is bookkeeping software can calculate based on your income and expenses over time. If you're keeping up with it, doing an absolute minimum of once a month, your bookkeeping software can say, we suggest you make an estimated tax payment of this amount. That's going to be for the higher end influencers. But somebody that's just starting out today, just starting to get monetized, starting to get some ad revenue, I recommend the book Profit First by Mike McAllowitz. Under $250,000 of revenue per year, set aside 15% of each month's revenue in a separate account that doesn't get spent accidentally. Once that amount reaches $1,000, that business is ready to start making estimated tax payments. The best way to avoid an April 15th surprise is to be making those quarterly estimated tax payments. You can do it with the 15%, or businesses that have revenue of higher amounts start using bookkeeping software that keeps track of those expenses and then suggests an amount for you to use.
What about thought leaders that are location independent? They can live anywhere. What considerations do they have to take into account when they're paying taxes?
This is a very interesting question because I am coming to you live from my Airstream travel trailer. My husband and I are nomads. We have been for over 6 years. There are state-by-state considerations. Once you start making a significant amount of money, say $100,000, it's a good idea to work with a CPA who's familiar with how different states tax. Each state has a different threshold. Some are based on the number of days that you're there. My least favorite tax-wise state, and everybody's state they love to hate, is California. California has the strictest possibility. If you are physically present this came up during the Super Bowl this year, where one of the players ended up having to turn over his entire winnings from the Super Bowl to the state of California because of the amount of time that he was in California. California is allowed to require out-of-state non-resident to file a California state income tax return. They're allowed to say that you need to file that if you're physically present and working in the state of California after only 2 weeks. It's a sliding scale. They can decide. That's why they're my least favorite, because most states, it's 6 months. So what I do with my clients who travel full time is they keep a diary with me. They keep a Google sheet that we share. They let me know where they're planning to be. For many of my clients that are parents, they don't connect what they did in January with what they do in November and December. Those all count. It's the calendar year. There are states where you don't want to be working and physically present in a state for more than 60 days. So you have to pay attention to what you do in January and February and coordinate that with what you're going to do in December and November. So you're tracking those through the entire year. We do that to manage whether they're going to need to file as a non-resident in a state.
Trading at Schwab is now powered by Ameritrade, bringing you an expanding library of education with even more ways to sharpen your trading skills. Access new online courses, insightful webcasts, articles, engaging videos, and more, all curated just for traders. Plus, guided learning paths with content designed to fit your unique interests. No sifting to find exactly what you need so you can spend your time learning to trade brilliantly. Learn more at schwab.com/trading.
This episode is brought to you by Workday. Guessing is for game shows, not your business, especially when your margin for error is zero. Workday is the enterprise AI platform for HR, finance, and IT, with a deep understanding of your organization's context and guardrails. So every AI action is permission aware, giving you accuracy 24/7 and the ability to not just get work done, but get it done right. It's a new Workday.
A burst pipe, a dead water heater, the AC calling it quits. Who do you call? HomeServe is an easy way to handle unexpected home repairs with plans covering stuff basic homeowners insurance usually won't. Instead of scrambling for a contractor, you make one call to get the repair process started. Join the millions of customers who trust HomeServe right now. Go to homeserve.com/podcast for 50% less your first year. That's homeserve.com/podcast. Savings compared to renewal price, void in Florida.
You offer one-off consultations if people have the CPA, but they need advice in this area. You offer that as well, right?
Most of those, it's funny, will come up because they're also RVers, and they're influencers, and they're saying, wait, I want to do this one thing that only an other RVer would understand. And I was like, sure, I'd be happy to meet with you for an hour. Let's get it all nailed out. So you can make a decision based on actual rules instead of trying to figure out what to do later after you've already done the thing and then trying to clean it up.
How can people connect with you and learn more?
The best way to connect with me is on LinkedIn. I've recently started a YouTube channel called Pocket Sized Clarity.
For the audience, I encourage you to check out Penny's socials and connect her and reach out to her. Thanks so much. You enjoyed this conversation.
Thank you.
Let's zoom out. If you're a physician, founder, or high-income professional, and you feel like you're working harder every year, but not structurally freer, you're not alone. The mistake isn't effort, it's architecture. This show exists to help you convert expertise into scalable leverage, faster and with fewer expensive missteps. Here's the diagnostic I mentioned before. If your income requires your constant presence, if your capital isn't compounding outside your profession, if your highest value talent is doing low value tasks, you don't have a growth problem, you have a leverage design problem. And if you want to fix it with clarity instead of guesswork, I offer a limited number of one-on-one leverage strategy sessions each month. We audit your income model, capital deployment, authority positioning, and structural bottlenecks, and design your highest return move. If you're serious about compressing years into months, the link to apply is below.